Hi, I'm Ian Miller, Chief Marketing Officer for Mortgage Capital Trading, and we're here in Times Square for the MBA's National Secondary Conference. Today, we're continuing our series of MCT Mortgage Industry Perspectives with our question, what is the biggest challenge facing mortgage lenders today?
One of the biggest challenges lenders are facing would be how to remain cost effective through, the current iteration and preparing, to head into the next. I think everyone's wondering, obviously what's next, what are rates going to do, what's the Fed going to do, what's volume going to look like, but ultimately, remaining cost effective and, positioning themselves for, whatever comes next, I would think is top of mind for most originators.
I believe the biggest challenge that lenders are facing today is the same challenge they face every single day of the week of every year, which is constant change. And the biggest challenge with change is being ready for it, the anticipation, having the skill sets, the resources. So being ready for change is always number one priority, whether it's regulatory, interest rates, demographics, market conditions. But the mortgage industry has been quite resilient over the last several decades, and I'm quite certain also that it will continue to be so in the future.
I think their biggest challenge would be volume, but not really tied to rate, more so for inventory in the housing market. Builders can't build homes fast enough. Small builders cannot keep up with the demand, and too many current homeowners have some golden handcuffs with rates in the 2s and 3s. So outside of a large life event, we're not really seeing many people put their houses up for sale. So there's just not much inventory in the housing industry.
Rates are higher than we all would like at this point in time, and we all believe they're coming down when inflation comes down. But the uncertainty of how long this cycle's taking is definitely longer than a lot of people expected. We were thinking there was going to be 3-4 rate cuts this year. Now, maybe there's going to be one, if that. So that uncertainty of operations team, when the volume's really going to come back, and having higher rates leads to a lot of different challenges, volume and such. But just the bigger uncertainty of when rates are going to be coming down is kind of keeping everybody on edge right now.
The economy as a whole in terms of rates, borrowers have been expecting rates to drop, and it seems with the way the government intervention is going that they're just waiting for relief. And as a lender, we're just hoping to offer good products and help our borrowers be able to buy homes, and that's kind of what it's all about.
So the biggest challenge we're facing is, getting these securitization pay-ups that exist on the back end that currently just end up as windfall profits for the originating institution or the securitizer, the end securitizer. We want to get that to the front end. The lenders want to get that to the front end. The agencies want that to the front end. And so that's a challenge that we're working on. We're working on solving through getting that transparency and front end pricing through things like base rate generator.
Well, I'd say it's probably the competing with like the large banks, because they hold those jumbo loans in portfolio. So in the jumbo market, which is a lot of the Miami market and South Florida market now, our average loan size has gotten really large because the prices have gone up so much. So competing with those guys, like when the market moves, their cost of capital stays the same. So even though the secondary market rates have gone up, their rates, tend to stay much lower. So when rates are higher in comparison to their cost of capital, it's very hard to compete. But when rates come down, we're within striking distance. But we'll see what happens when things improve, hopefully in the near future.
I would say affordability and inventory. Even with those couple of challenges, most of the clients that I'm working with so far this year have seen an increase in volume and profitability over last year. So I feel like there's a lot of positives to start the year off.
From my perspective, I think the biggest challenge for all lenders is where are we going to find qualified borrowers, production. Lenders are looking for loans. We've got an inventory problem, but there's still great outlets out there for lenders to attract consumers to fuel their business. But I think it's production. For me, that's number one.